All right, good morning and welcome. It is Thursday. It's time for Thursday's morning market tour, and not a lot going on overnight, but there is an important thing not going on overnight, and that is no reversal here, no retracement of yesterday's rally, yesterday afternoon's rally. Somewhat organic. In any case, buyers gained traction for the effort. In fact, it qualifies as a breakout. Breakout is the breakout portion is a one-day process of closing above a multi-session range. Lots of multi-session ranges here. This ongoing range that we've been chronicling pretty much every day, all of the accumulative behaviors and the downside levels or limits. But yesterday qualifies as a breakout from at least two multi-consecutive sessions that had overlapped each other at some relevant level or area. So being a breakout, it still requires at least a second higher close, a consecutive higher close today, which would then require at least an eventual third higher close, not necessarily Friday. But that's how breakouts work at vidiTrade. Right now we're on a attempt. There hasn't been any reversal down. In fact, this is the bias signals that were established by price action through yesterday's close. This is this morning's bias. So uploaded yesterday at 5. And of the two green lines, here's yesterday morning's biases. The bias signals being the internal red and green, their targets being the external red and green. So this morning we have bias signals. A bias would trigger above 41.82 and would then target 41.98. If that 41.82 were exceeded through 10.15. Now testing 41.82, this is all post-open by the way. Testing 41.82 post-open. It hasn't been tested post-open yet because we haven't opened. No matter how much it's tested pre-open, which it is being tested now. And here, let's get back to this. So there's the three, whoops. There we go. There's the 3-minute on the left. 3-minute chart. So 41.82 is this green line. It's being tested now. If it's exceeded as of 10.15, we'll be targeting 41.98. If it holds its test through 10.15, that would trigger a renewed bias. Reverse bias. Having held a test of one signal would target the other bias signal. Right back down to the bias down. By the way, there is another setup altogether. Having probed overnight highs now, or yesterday's highs overnight, having probed yesterday's intraday highs overnight, now there's another setup. It's not actually being threatened, but just so you know, since we've actually probed intraday highs overnight, if the first 15 minutes, this first timing window, is exited back under the Globex Opens range, the Globex Opens range is basically down to 41.67. If through 9:45 we've reversed all of that in the first 15 minutes, that's going to give us a heads up that this buying is temporary and already ended. And by the way, creating a slingshot effect or rubber band effect, stretched rubber band snapping back down, we'll start anticipating the bias down is going to trigger. And even though this is its target at 54, bias down is bias down, and until it decides to end, it can extend. And if it extends, we've got this 41.34, 41.38 range that has been so magnetic until yesterday afternoon that we would anticipate under 41.54 heading right back down into it. So a lot depends on extending higher this morning, trying to get free from the orbit of any of those attractions below, let alone triggers. Just want to point out a setup that this is not a too late to break setup. A too late to break setup, it might look like that because we're basically contained between the bias signals, and that might seem like we've been ranging sideways overnight, but it's not, because we do have discernible breaks, or at least one break out from a range. So this is not a too late to break setup. I also want to point something else out from yesterday. We talked about this yesterday's close. Even though yesterday's open at the very last minute rejected the session-long rally setup, it was working on a session-long rally setup by threatening to exit its open, its first 15 minutes above 41.40, instead of rejecting the probes above 41.40, which, by the way, rejecting the probes above 41.40 yesterday, that is yesterday's open. It might not look like a big deal right now, but yesterday morning it was a pretty big range relative to what had been ranging. By exiting the open under 41.40 instead of above, we were able to anticipate at least a big collapse. It didn't have to collapse, it just had to point down. But its sellers got ahead of themselves, just as buyers had gotten ahead of themselves. That's the whole point to identifying a session-long failure. The session-long setup's failure pointed down. It was as bearish as it would have been bullish. But the session went on, thanks to the news, went on to perform like a session-long rally would. A session-long rally would probe higher every timing window, with one exception. Usually one exception. And in fact, yesterday's exception was the last 60, 90 minutes, the final window of the day. So why is that important to come back and revisit a setup that almost triggered and didn't? Because having gone on to perform anyway, if in fact yesterday's session-long rally properties are valid, then this morning is likely to rally too. It's not likelier because we're going to go ahead and assume that yesterday's session-long rally did not trigger. But if that's through no fault of its own, then that's one more upside influence. So long as we avoid gapping back down or just isolating this probe above yesterday's highs, we're going to anticipate extending the rally. We're going to even anticipate that it be maintained enough to confirm yesterday's breakout. That is through the close. So bullish day today is anticipated unless the open is already rejecting this overnight high. If the open is already rejecting this overnight strength, then we're heading to 41.54, maybe even 41.34. So it should be fairly easy. I don't know that we're going to necessarily trend, that it's going to be the easiness of yesterday afternoon's buy signal. I mean, yesterday morning was fun enough with these two turns, and then reinstating the bias up signal at the last minute, and its 41.48 bias up target being touched. I mean, that's the 41.48 morning's bias up target being touched, and then boom, right back down. Not that that would have been that there was any time for the sell signal. But then the afternoon being entered already with a buy signal intact. Very nice run there. So I don't know that it's going to be this easy, or if instead it's going to be more like Tuesday morning, which was just a chop, and really into the afternoon that we waited all day for our 41.21 target. But it'll be the easy where we'll know through the open or after the open, probably by the end of the first hour, what today's session wants to be when it grows up. So, any questions about any of that, please ask. As far as other markets, so the dollar is breaking. Euro versus the euro, we're heading down through another relevant support. So there was an opportunity here for this turn coming out of the weekend to retest Friday's low and to launch a rally back above 109.25, 109.30. That gap down yesterday after a couple days of pause. Gapping down yesterday, a gap under all prior lows in a trend wants to be retested from above. And not until touching a prior session's range is that even possible. So the open yesterday, 108.50, needed to be retested from above. It is being retested from above, but it'll need to be rejected through today's session, through today's close, not necessarily through the open. The overnight low doesn't require being retested, but 108.50 is now neutralized. If today opens under all prior lows again, that'll require another lower attraction before a recovery could take hold. We'll give it every benefit of the doubt if today rallies instead and doesn't leave a fresh open outstanding. We'll give it every benefit of the doubt for being able to bottom, but otherwise, if any negative close today confirms the dollar is extending into another down leg, it is pretty much make or break, because if that selling pressure doesn't gain traction today, then alternatively, there's at least a huge correction. Again, above 109, I'll lower the buy signal, but above 109.30 would confirm we're heading back to 110x on the euro. Gold, meanwhile, threatening to break its relevant support here. Its support here under basically 1982 that would put into play 1957 is being probed, or at least still overlapped, but probing fresh lows. And silver, which didn't have any room for any lower, its opportunities to turn and then to potentially trigger a buy signal above 24.33, 32. Instead, we're extending down to testing its last line in the sand, 23.66, closing under 23.66 would extend its down leg. Both of those, by the way, in the bigger context of a bigger bottom having preceded all this, I would anticipate this to just be an extended correction, but not eking its way lower. We're seeing some momentum expansion or increase. So burden of proof is on buyers. These are falling knives. I'm not catching these falling knives or trying. But any kind of proof that buyers are gaining traction, we'll give that a benefit of the doubt. Probably if it's maintained through the close. I don't see that yet. Let's check at the close. Long bond, massive head and shoulders, finally breaking lower. At basically the very last minute that its symmetry could be preserved. It doesn't have to be a precise equivalent of the left formation to the right, but this last leg didn't have any room for any higher high, and in other words, this break lower had to be confirmed as being the break lower by not extending too much higher in its bounce. Literally ate up the last bit of room for that. Anyway, the breakout on Tuesday came back and tagged up its neckline yesterday and reversed into negative territory to close negative. And now that's extending lower overnight. This could just be, doesn't matter that it was such a protracted, massive head and shoulders. It could be satisfied with just a very shallow dip to 127.12, 126.28 in this case. But there is unfinished business below, outstanding. This island has, and its gap under all prior lows, have always wanted to be retested. And that is a requirement. All islands are made to be retested. Having missed this one opportunity to neutralize that earlier doesn't excuse it from the ongoing liability. Whether that's to retest it and form a more durable bottom, which is my suspicion, or to extend down more substantially. In crude oil's bounce yesterday, if that can be expanded upon, gain any traction to the upside, it still has to take out, it still has room for noise, basically, up to almost 75 before we can even consider taking 62 off the table. But otherwise, 62 remains intact. Yesterday, potentially being just a one-off, since we weren't attracting stronger-handed sellers below, just to go try and find stronger-handed sellers above to sponsor that break. That's what it looks like overnight, so we're not getting any resolution here overnight, regardless of the red. Still have a lot of room here to produce some more selling pressure before resolving down. And then Bitcoin, I see a question. Let me come back to that question in a moment. Bitcoin, bigger picture, there is no requirement for anything lower to develop. Having said that, though, that's the hourly. Let's go to the 15-minute. Having said that, since there was a opportunity to end the decline by reversing the trend back up, by spending a 24-hour window above 27,000. That's my methodology's technique for identifying a breakout, since we don't really have a close in a 24-hour continuous market of cryptos. But in this instance, 27,000 was probed, and not arbitrarily, but when that 24-hour window closed, we were right back at 27,000, so the breakout failed. Warning shot across the bow, perhaps, but now we need to see a close above 27,750 to form another breakout. And meanwhile, without it, 24 hours spent back under 27,000 would trigger a break in the opposite direction. And even though the pattern doesn't require any fresh low, it would put into play a fresh low. So kind of a make or break situation for Bitcoin. Although there's no timing window until one or the other is probed. 27,000 was probed, but no 24-hour window back under it. In this case, though, there's an interesting feature that was added for this failed breakout. We don't know that it's failed because we haven't reversed in the opposite direction. Premature, perhaps. In this case, this breakout, had it extended, would have run into resistance at this uptrending support, now resistance, and kept the overall resolution a secret until that reaction could be resolved. In this case, though, since we have a false breakout, all the way back to its origin, if its 27,750 high is broken and extends, we'll anticipate the least bit of resistance at this uptrend intersection before extending higher. In other words, having tagged up already, resuming the breakout now would suggest something that wouldn't have been suggested until much later, much higher. That is that a much stronger reversal is underway. So there's a lot on the line here, a lot riding on actually recovering 27,750 or not. but we don't have resolution right now. All right, I see a question. Isn't it true that the morning bias environment following a session-long day usually trends in the same direction? Yeah, I don't know if you joined late. That's we talked about that right at the top. That even though yesterday failed at the last minute to qualify as a session-long rally that would have had us anticipating trending up through every timing window, it didn't. So because of that, because it didn't qualify, we're not relying on it being influential this morning as well. We can't go back in time and qualify the session-long rally when it didn't qualify. Because the session went on anyway to perform as if the session-long setup did qualify, we're going to keep open in the back of our minds. And in the blog, I pointed this out last night after yesterday's close. We're going to keep the door open. So long as we're not gapping down, we're going to assume that the property of a session-long rally setup is influential anyway, and anticipate that this morning does extend. All right. Question: what is my expectation on C3 AI? Is this a stock question or typo? Okay, I'll come back to that. Question looks like, okay, so AI. Okay. Did that satisfy the question on the session-long rally? Let me know if not. On AI, so this is about 6 weeks ago, I pointed out I like this breakout. That was entirely valid, but let's anticipate pullback into the range. That pullback into the range, thanks to some negative news, extended through the lower end. We actually had a sweet spot of support anticipated. Where is our AI chart? Hang on one second. So here it is. I was back on TradingView. We actually had a sweet spot of support anticipated, or basically two candidates for support. They were tested, or the second one never quite met. Doesn't have to be, but we definitely got into support and have rallied since then. So the question is, what's my expectation? Is that the pattern that I identified is playing out? That this was a valid breakout? So whatever the detour, whatever its depth and duration, we're anticipating that the bigger picture, oops, that's too big of a picture. That the bigger picture, this basically bigger cup and handle, is now resolving up. All right. Any other questions, keep them coming, but I'm going to end the recording here. And if there isn't anything else, meet back here at 9:15 for last minute tactical update. Good luck today. Yesterday is or the last minute to qualify as a session-long rally that would have had us
I'm sorry, just seeing
anticipating
this
trending
question.
up through every time.
Targets on AI?
It didn't. So because of that, because it didn't qualify, we're
give
not
me just a
relying
minute.
on
I
it
need to get
being
the
influential this
recording
morning
turned around,
as
and
well.
I'll be right back. And
We can't go back in time and qualify the session long rally when it didn't qualify. Because the session looks like, okay, so let's anticipate methodologies, pressure before resolving down. And then Bitcoin, I see a question. Let me come back to that question. 126.20 case to take out. I mean, it's trend back up by bigger picture. There is no requirement for anything lower. All right, targets on AI. And the detour doesn't change anything. Nothing new. Cup and handle. 44 is essentially the target of the cup and handle. Having said that, if we actually start breaking out, that encounters higher prior lows. If we start breaking out through those higher prior lows, start converting this entire, look at all that chipping away at that prior extreme. If we start reversing that, basically we're inverting everything that developed under this, satisfying those sellers, becomes an offset back above. So I don't have a target, a limit, that is, a limitation to what could be produced to the upside. If we start reversing the trend, we're well into the triple digits. right, so I'll do this a couple more times today just to remind that there is a special offer. Remember, I only do this, only make this available during the YouTube simulcast stream. And that is the link. It's in your in the chat on YouTube. But this is a special offer where normally the vidiROOM upgrade is $200 per term. But if you subscribe through that link today, then you can get this for the upgrade for free for the next 3 terms. That's $600 in savings. While you go through the learning curve. So the first 3 terms, every 4 weeks, $175 each. But no $200 upgrade, or upcharge that is. After 3 months, if the education and techniques aren't paying for the $200, let alone the $175, let alone multiple times over, obviously you shouldn't be pursuing it. And you probably would have seen maybe that, I would assume, that it's not consistent with your own style or haven't learned how to incorporate it. But in the interim, definitely worth the savings. Yesterday morning, I made the same reminder before closing the morning stream for the day. And within minutes of closing the morning stream, and actually, we closed the morning stream, closed it here during the noon hour. Several minutes later, the breakout of a buy signal. At least I'd identified the buy signal by then. So if you were here yesterday morning, you were able to see that that was our buy signal. But you also missed out on the guidance as that developed, that the afternoon bias up signal itself, not just that buy signal, but the bias up signal that afternoon was, what was our buy signal? Was it 53, 58? Anyway, its target was, no, that's right. It was 40x, and our target was 63. The bias up target 63 just sliced right through it. Our next higher target was 75. And that's where we came into resistance. So, and hovered for the day. Rest of the day. So, just fair warning. The morning stream, day 2 of this 2-day morning stream, free morning stream, ends during the noon hour. And then we won't be doing another one until well into June. Maybe a Bastille Day promotion. Anyway. All right, see you back here at 9:15. Sorry, is that from the transcript of the planner session, or is that? I don't see that in the post. This is yesterday's post. Oh no, that's this morning's. Hang on. Here you go. This is from yesterday's post-close wrap. Why does it do that? That's weird. Huh. There you go. Must be this. Comments from the... Is that what I said during the tour or during the planner? Anyway, so this is yesterday's post-close wrap. But, I mean, the underlying point, I mean, just to be clear on the underlying point, even though, I just want to be clear, and tell me how I can be clearer about this, because I want to have more information in my presentations, but I don't want to be confusing, so I have to take stuff out if it's not, if there's no efficient way to make it clear for the time that we have. But the point I want to make is, even if a setup isn't validated, isn't confirmed, we'll still go back and check it if, apart from that, it would have been influential. Its influence coordinated anyway or correlated. I want to know that because I'm looking for predictability. I'm looking for something to anticipate. And if just because the setup was unkind and didn't trigger, so we didn't get the benefit of it intraday, if there's a reason to anticipate that it's what its influence might have been, I want to throw that into the pot anyway, just so we can have some extra reliability. All right, so let me know if that's not clear, or how it could have been clarified at the time. Like I said, I'd rather leave stuff in than take it out. Rather figure out how to make it clear. Yeah, no, I gather that. I'm just, I want to make sure that it is, that I have a way of avoiding that. If I'm not confident that I can present it efficiently, since we've just got the brief time available for the planner session, then I have to leave it out. I don't want to do that. So let me know if there's any way that it could have been clearer. Definitely let me know. All right, good morning again. Welcome back. It is a decidedly different look than when we were reviewing options for the market this morning during the strategy planner session, but we did address what would happen since, of course, nothing had happened yet post open. What would happen or what we'd be expecting if rather than extend, rather than gap up, which wasn't actually necessary and still isn't necessary to rally. We're not abandoning the potential to rally. It is still very much alive. Again, nothing is set until post open. But there is a thread here that having probed yesterday's highs overnight, that the open, the first 15 minutes, the first timing window noted here under the chart, is exited at 9:45 back under the Globex opens range. So the Globex session opened and printed a first hour's high and low before Asia opened, before anybody else, and created a reference point between 41.67 and 41.70. And that's usually irrelevant unless, even when the prior session's extreme is probed overnight. But in this instance, having probed the prior session's extreme overnight, opening under that Globex opening range would basically be a paradigm shift and reverse the trend down for the morning. Trigger bias down, put into play bias down target, maybe even extend down to 34.38. It is a headline reaction because it's news driven. The catalyst is artificial, so it doesn't necessarily last. Also, during the first 15 minutes, there is this handoff from the overnight to the intraday. So at 9:45, if we've actually recovered back above 41.67, 41.70, the attempt to reject the overnight trending is itself rejected, and that basically puts back into play the initial overnight trending. We'll be looking back at probing yesterday's high, retracing the overnight high. Between 9:45 and 10:15, the bias window, we may actually have recovered the bias up signal to trigger it. So a lot of stuff has yet to happen. But first things first, we have to make it through the open either at this point above or below 67.70. So having tested that, I don't have an immediately actionable setup. There is a line in the sand that, among others, that starts around 69.70. Any kind of buy signal, I'm not going to be buying weakness because that weakness is on the verge of entrenching the downside. But at this point, 70.50 is, if you take it as immediately actionable, just keep in mind it still needs to exceed its 4-minute high to indicate that reinforcements had arrived. But that's the first available inflection up. And then on the downside, about 63 is the room for noise. If we can touch 63 and see its disposition, that'll be of interest. All right, any questions about any of that, please ask. I'll be right back. No rookie question, don't worry about it. So, sorry for the rookie question. We probed 4170 for 4 minutes. That is seen as a positive move. And if it drops down to 4163, that could be considered bearish for a 4-minute probe. So here's what the 4 minutes refers to is a qualification. So think in terms of time and price. So first I've got the price. There's the price, 4170.50. And if 4170.50 is pierced by a tick, it's irrelevant. Or 2 ticks, and during the open, 3 ticks. 4 ticks is just to start the clock ticking. So once we start the clock ticking on that 4-minute probe above 4170.50, then we can start the 4-minute countdown. And we'll see. How high do those buyers get to go? It could be a few ticks, it could be a few points, it could be quite a bit. But what we're thinking in terms of is the attention span. The attention span of counter trend sponsorship. Until that first 4-minute range is even identified, we don't know how much higher would reflect reinforcements arriving. That's the strong-handed buyers, reinforcements. Now, that doesn't mean that's where you buy. You don't wait necessarily or front run it. Whatever you do is your own strategy, and I discuss multiple strategies during the day. But that's where reinforcements arrive. So different traders are going to use different tactics. Some may have a buy stop right above 70.50. Some might wait a couple of minutes to see where the 4 minutes seems to be taking us. Some traders might wait for those 4 minutes and negotiate on a reaction. As you watch, as you're in the room, you'll see different kinds of behaviors, and you'll know here's a tactic, here's a tactic. See, we'll find something that settles on your style. You will. I don't want to get to start down that road right now because we're going to be interrupted in a few seconds. But that's the quick answer. Is 70.50 is definitely a relevant price point. 4 ticks above it starts the 4-minute countdown, and then that 4-minute countdown identifies how much higher we'll know that reinforcements are actually in control. And everybody makes their own decision based on whether they want that higher degree of confidence or be able to manage against a knee-jerk reaction or whipsaw, etc. So we've opened, and by the way, let me just finish annotating this briefly. So we're opening basically at a relevant level. We know it's a relevant level. There's a thick red line there. There must be something interesting about it. It was calculated at yesterday's close. It turns out to have been the overnight lows, influential. And all this momentum slicing through it has basically narrowed and gravitated to 4166, the bias down signal. So that's an interesting point, an interesting observation to have when that's all we've got is observations at this moment, that 4166 a relevant level is basically defining the open. In fact, the opening print, 67.20, the opening bar, I should say, 67.25, gets down to 65.75 on that opening bar. So clearly 66 is relevant. We're looking at the right stuff, and we can even infer from that the patterns in play through yesterday's close, remember, 66 is a derivative of the patterns through yesterday's close. If it's being influential at the opening print, probably the same sponsorship that was involved in producing this is still involved in producing this. They're deciding this is where we stop, or this is where we start. Let's see. So, having touched, now this is something we didn't know was going to happen necessarily. Could have stopped, we could have bounced higher and post-open, not even touched the bias down signal. But we've actually touched the bias down signal post-open. That can't be taken back. No take-backs. So now that we have touched the bias down signal post-open, if the bias down signal isn't triggered, let me get the views. Subscribers have access to the blog. This is the blog with all of the references. So there's our post-open analysis. Here's the bias for this morning. So again, this is published at yesterday's close, or after yesterday's close, based on patterns through yesterday's close. So if you look over here at the 3-minute chart, I've got the green and red identified there. That is the bias parameters. So if 4166, what are we doing? There we go. 4166 is not broken through 1015. If it holds its test, call that a reverse bias. Holding the test of one signal would then target the other signal. That would put into play 4182. If at 1015, 4166 has held its test as support. So any kind of risk reward, I know what my reward component is, 4182. All right, so we are testing also, another interesting reference point is the Globex Open. The Globex Open's range. This is called a Globex Flip. We touched on it during the pre-open strategy planner session. Having probed the prior session's high overnight, exiting the open under the Globex Opens range, 4167, 4170, the first hour's range, would basically isolate that sentiment and be a paradigm shift to the degree that we would anticipate it influencing the balance of the morning down. To whatever degree, whatever slope that is, or however deeply sellers would be in charge. So if that's the case, if at 9:45 this initial Globex range isn't recovered, if it's being broken, not overlapped but broken, then we'll anticipate 30 minutes later that this bias down signal is going to trigger. If we're back above it, if we're back above 4170 at 9:45, the first 15 minutes, having maintained a test of it, having put off the threat of a Globex flip, that's not necessarily as bullish as it would have been bearish. It's not a binary choice. It just prevents those sellers from gaining control. There's no reward to those buyers necessarily for making that happen. But it would be an opportunity for sellers to gain traction that they'd have failed, and so we can start to suspect that maybe they're not going to trigger bias down. And during that next 30 minutes, any test of the bias down signal would likely hold. So, being halfway through the first 15 minutes and still not extending down, and look at this, now even probing back above, it's really tough to give sellers the benefit of the doubt, but let's see, this could be a last gasp by buyers, sellers giving them a little bit of room to trap themselves. I don't know, I don't need to know, I just know that this is a relevant level 70-50. As soon as it's pierced by at least 4 ticks, that'll start the 4-minute countdown, and any higher we'll know is reinforcements. And really patient, unaggressive traders can wait that out and maybe get some sort of pullback to get long on. Or at the opposite end of the spectrum is the most aggressive trader who's got a buy stop that's already triggered and is going to play defense if those 4 minutes aren't exceeded, or if during those 4 minutes we're already rejecting this resistance test back down. But there's a minimum of 4 ticks now, probing 70-50, so the countdown is on. It's also possible that at 10:15, I don't want to get ahead of ourselves, but it's also possible that at 10:15 we'll have already retraced to the bias up signal and be positioned to trigger it. So a lot of stuff is on the table here. I call those templates. And as price action comes in, they fill in the templates. Some of the templates are abandoned. Some are filled in more so, and we start looking forward. Where does this template lead if it continues to be filled in? Those are called likely resolutions. So remember, those first 4 minutes probing the buy signal, they could be dramatic, substantially higher, or not. The more aggressive those first 4 minutes, experience suggests being more suspicious of it. This is restrained optimism. Either one from a contrarian perspective, giving us some glimpse into the future. All right, so the 4-minute high is established. Anything higher is reinforcements. And maybe they're weak-handed reinforcements. If they're strong-handed, we'll expect them to behave appropriately and basically put in some big consecutive up bars. While waiting for that, it's possible to fluctuate around the buy signal. Shouldn't fluctuate too much. We're pretty much through the first 15 minutes and still overlapping the Globex Opens range. In other words, not decisively rejecting it. with 4 minutes of detouring back up under the buy signal, we're basically establishing the price range that we consider is testing the buy signal. Anything in there is off limits from triggering a sell signal. You can't be doing both. You can't be testing a buy signal, trying to trigger a buy signal, and trigger a sell signal with the same bars. Einstein proved that. So long as we're in the first 4 minute range, either way, whatever those first 4 minutes of buyers and sellers decided was their territory, and not necessarily these buyers trying to prove that this is their territory above, but sellers letting them do that. That's their attention span as well. So long as we're testing that, Schrodinger's box, we don't know if it's weak-handed sponsorship, which one is weaker-handed, stronger-handed, until reinforcements arrive either way. Reinforcements above or stronger-handed sponsorship deciding to take over these buyers, reversing down. So, under this 67 low, give it a 1 or 2 point buffer for noise. As deep as 65, we happen to come into 66. There's some other stuff going on there. I can also look at a retracement of this leg. 61.8% of that, these are inverted, is 66.25. So anywhere in here, if I want to be more or less aggressive, I'm going to have a sell signal. I'm going to raise my sell signal to 65.75. Now, it's too late for the Globex flip setup. That by 9:45 needed to have decisively maintained a break or broken back under the Globex opens range. The lower end of it being 67. Instead, 67 was only being overlapped when it mattered, so no Globex flip. It doesn't mean we can't trend down anyway. It just means we won't have the luxury of that advance notice. So, here's some other strategies since we have a minute. A very aggressive strategy, a buy stop right above the buy signal. Of course, that's going to necessitate having an immediately placed stop, protective stop, stop loss, whatever your label, in case this were to immediately react down, because it is resistance after all. So that's the flip side or danger of immediate actionability. Or waiting to see the 4 minute high, using that as a touchstone. If we take for granted my inflection calculation and then what buyers were able to accomplish in their first 4 minutes and create a range of noise around it, I can see room down to 66.50. I don't want the exact midpoint. I want 38.2% of that range and 61.8% of that range to be bisected Fibonacci style. So I'm not going to have a sell signal any closer than that because that's room for noise. This is kind of aggressive as it is. But if I can get in long down here, I'm that much closer to where I'd know it's wrong to be long. While I'm waiting for the 4 minute high to pay off, to play out by attracting reinforcements and extending higher, there's this room for noise below during the first 4 minutes, and we're within it. So if anything lower or with a point or two room for noise, or very clearly the sell signal, if any of that were to trigger, I'd know it's wrong to be long. And it doesn't make it any likelier to play out to the upside, but the closer I can get into that point where I know I'm wrong, the less loss I have to take if we're dealing with a system or using a system that has any kind of edge, then the more often I can limit my losses and my winners are going to play out to a greater ratio. Got to take those all day long. This may be a loser right here. By the way, let's say it is. Let's go ahead into the future and say, yeah, this is going to trigger the sell signal. Or at least dip too deeply. Whatever it is, we've gone through a lot to identify this relevant level. And it's 4-minute high. So whatever happens down here, back above its 4-minute high, is still going to be bullish to some degree. So even if I'm stopped out, I want to be prepared to get long again if somehow this proves to have been just an anomaly or a rogue reaction to a headline that we don't have control over, or my own stop was too aggressive. There's a happy medium, or sometimes unhappy, between where we know, or where price starts telling us that it's heading in the opposite direction, and that buffer that allows for the noise that might be trying to tell us that, but is only whipsaw. Can't be too far away to prevent being triggered or stop being triggered by noise, because then we don't have a stop loss but a loss maker. But we can't be too tight either. So got a little bit of an equation that gives us a little happy medium. Yeah, we keep that listed over here when there's economic reports coming. Also Fed speakers. So keep that in mind. As soon as those are done, I'm going to replace this sidebar with some other notes for the day that, especially if you're new here, you'll find interesting. A legend, risk-reward, guidance, different levels. Once we're all trading with quantum computers, we'll be able to test a buy signal and sell signal at the same time. Or we could have our androids do it for us. Now, there's nothing inherently good or bad about the delay in actually exploiting the inflection. The delay doesn't necessarily lead to its rejection. It does, though, the delay in actually exploiting this, again, it actually doesn't correlate to the eventual resolution. The delay in getting from here to here, for instance, whether it happened at this time bar or this time bar, there's just no correlation that I've found. However, the delay in getting started with it does correlate to a detour. The longer that we're waiting here without attracting those stronger-handed buyers to make this happen, often means the deeper that we have to go looking for those buyers because they're not being attracted here. And if we do that, we're going to be triggering a sell signal and giving sellers a benefit of the doubt until they're disproved. So I'll be adding signals as necessary. So with economic report coming in the next several minutes, price action can be inhibited and noisier. The knee-jerk reaction to an economic report, first 60 to 90 seconds, is weak hands. Everybody knows it's coming. The size of money that matters, that can actually influence price action, has already incorporated what they anticipate the number being. They've got their own models. So if you don't want the exposure to the potential whipsaw, if you've got to stop, and you have to have a stop resting, by the way, no mental stops here. If you're concerned that the knee-jerk reaction to LEI might have a similar effect, you know, there was a Fed speaker. Thank you for pointing that out earlier, by the way. There was a Fed speaker on the tape that helped to drive price down. Earlier, there was some stronger Philly Fed number that also takes the heat off of keeps the pressure on, actually, on maintaining higher rates. Notice the language. Notice the language, though. Is it maintaining higher rates or continuing with rate hikes? Because I don't think anybody's really anticipating that there's a cut coming anytime soon. So, question: I positioned to buy after the 4-minute probe in anticipation of an upswing. Obviously, I did that too early. You don't know that. I mean, you just don't know. That's the thing about price action, is we don't know if this is going to go one tick through the inflection point and never look back, or take a little pause and then use that as leverage to snap back up, or stretch the rubber band, in other words, to snap back up. Or if this happens, we just don't know. And even this happening doesn't tell us that this is necessarily going to extend down. We think in terms of, on vidiTrade, we think in terms of price and time on the front end of the deal. So the 4 minutes, once qualified, once we trigger minimum 4 ticks, probing what I calculate to be the inflection point, we start the clock ticking. 3 minutes any other time of day, by the way. So we start the clock ticking to identify where those 4 minutes are, the attention span. And then the attention span of counter trend. So long as they're being held, or, a noisy window overlapped, here we can see, in retrospect, as it happens, the sentiment extremes. That's bunch of errant ticks. There's no overlap there. So long as that's holding, this has every bit the opportunity to resolve up as if this were triggered immediately. So just have to be consistent in your execution. Are you going to be an aggressive trader that stops yourself into immediately probing an inflection point, give it a couple minutes, miss some in order to get a better price on others? But once you've established what your tactics are, what your strategy is, the only way to judge, except for the results over the course of time, is whether those tactics were honored, whether you stuck with those tactics. And if over the course of time those tactics work out, they work out. Sometimes they don't, but the strategy's overall performance should dictate whether the tactics change. Well, yeah, I don't mean to say nobody is looking for rate cuts. But I think at this stage, I think anybody looking for rate cuts is looking for a recession and for the historical relationship between recession and the Fed cutting rates, leading the Fed to cut rates. I'm not a Fed watcher, but that's a degree of logic and common sense that I don't think is fair to give them. So that's it on 10 o'clock's report is out. Not a big reaction to it, but certainly inhibited ahead of it. Not that we know that it was necessarily because of that. But it's no longer influential. We're past its reaction. It is irrelevant now. So there's the legend, by the way, the left sidebar. That's the legend if you're interested in what each of the labels means. So as of 10:15, if this is what it looks like at 10:15, having held a test of the bias down signal, this will put into play an offsetting test of the bias up signal. If at 10:15 we're dipping at that moment, or 3 minutes either way, if we're dipping and overlapping the bias down signal, that would invoke a grace period through 10:30. And then regardless of whether the grace period is invoked, if at 10:30 we're then trading under the bias down signal, then that is not bullish. It's potentially bearish if the grace period was invoked. It just invalidates the bias otherwise. So we don't really have a catalyst here. One thing that is missing is a catalyst. But that's the interesting thing about timing windows. So it can be, not always, but it can be like an alarm goes off or a bell, the starting gate, whatever it is. If the first 15 minutes are spent establishing a setup, and it's not rejected at 10:15, it's like an alarm goes off, and suddenly we're exploding or imploding one way or the other, fulfilling or rejecting the setup. Not quite 10:15, but certainly behaving like the alarm went off. So as we move further away from the bias down signal, and 10:15 moves closer with each second, it becomes likelier and likelier that we're not going to trigger bias down. And having held a test of the bias down signal puts into play an offsetting test of the bias up. That's not official until 10:15, but all these other observations are contributing to that expectation. We get a growing degree of confidence. It's never going to be 100%, not until we're actually testing the bias up, the offsetting test. Even then, I'm a little suspicious. So this inflection that was allowed 4 minutes to identify where anything higher would be reinforcements, 4 minutes of counter trending. Well, now I've got a new inflection. It is 72. If we start probing under 72, wash, rinse, repeat. Same process, same logic flow. So if you look on the left sidebar, you see the sidebar now has been replaced with the legend. This is a reaction limit. It's either solid red or solid green. It's thicker. From above, it's a pullback limit, so it's red. Pullback limit is now 72.75. So if that's pierced, it can be pierced for 4 minutes before we know how much deeper would violate the pullback limit and the whole pattern that it's predicated on. Now, that doesn't mean you want to be long while waiting for that, because those 4 minutes can be pretty deep, even if we knew with 100% certainty it was going to recover, and we don't know that. By the time those 4 minutes have elapsed, and then we know how much lower would violate the pullback limit, we could be much lower. So you have to have a stop in here somewhere that reflects your own risk tolerance. You can always re-enter long if that turns out to be whipsaw, noise, knee-jerk reaction to something that just some shiny metal object that crossed the tape. So just imagine if that does happen. If suddenly price dips and it's allowed 3 or 4 minutes. Let me just adjust this. Pullback limit is now 74. If suddenly price were to dip and spend several minutes of those 3 or 4 minutes under the pullback limit, as we're coming to the end of those 3 or 4 minutes, price is still down here where anything lower would tell us it's wrong to be long. What a great risk to reward. Either we're about to be stopped out or the rally's going to resume. If that happens, even if we've been stopped out on the way down, that's one way to manage re-entry. Pullback limit is now 75. 75 was a long-standing objective above for the last couple weeks. So I don't expect it to go gently. We're going to be coming back to it several times, I'm sure. And by the way, before we actually trend decidedly or decisively or durably above 75, even if we cross 4,200, we might be coming back to 75. Before we get that done, 75's breakout may need to reset down to 34, 38. That may be in our future. So we're within 3 minutes of 10:15. So long as neither bias signal is touched within 3 minutes, either way, this is going to be a no bias. And no bias at post-open, not pre-open, post-open held a test of the bias down signal. We'll put into play an offset test of the bias up. We don't know the path there. That doesn't speak to the path there at all. No assurance of the path there, no assurance whatsoever, but we'll know more than nothing where the path there, whatever it is, leads. Also, since the bias down is, let's just fast forward and assume that the bias down signal has held its test through 10:15, through 3 minutes either way of 10:15, even through 10:30. We're looking for the bias up signal 4182. Well, if that's the case, if that's what the market is intending to do based on what initial buyers and sellers negotiated, not going to be very aggressive on a sell signal. That's not to say there can't be a substantial downdraft. Nothing can ever prevent that. If a negative headline hits, it's going to get a reaction. That's the nature of headlines. But we're going to be ready to buy it. We're just not going to waste emotional capital on trying to scalp it. If you're interested in scalping for some anomaly like that, then here are the levels to consider. If that's not precise enough, let me know what you're considering and we can fine-tune it. But it is official that as of 10:15, it is no bias. No bias didn't have to have touched either bias signal, but this one did. Touched the bias down, so we're rejecting the bias down signal. Holding the test of one signal now targets the other signal. So having held a test of 4166 as of 10:15, we're looking for 4182. Also, by the way, because neither bias signal triggered, either bias signal, if tested for the next hour, should be able to define that end of the window. And if it's probed, we don't have control to a knee-jerk reaction, or sometimes there's going to be some excess, we'll expect it to be retraced. Okay, any questions about any of that? We covered a lot. We're focused on the ES during the open and different strategies for it. So good time to come back around. Any questions about any of that, please ask. By the way, just one more point here. So this is a headline reaction. This was the Wall Street Journal's Fed Whisperer. So it's an artificial catalyst, and that makes it vulnerable to reacting back down, to retracing or correcting. So there's room in here. It just wouldn't be surprising if this first knee-jerk reaction, until there's, I mean, I can really get granular here. If we consider all of this to be that knee-jerk reaction, we could still see something around 71, just to get rid of the noise. But any questions about any of that, please ask. There's a couple questions that came in. Let me know if you're ready for the bond question and the NVIDIA question. If you're ready for the bond question or the NVIDIA question, let me know. So by the way, higher highs, pullback limit is 77. And I'm leaving the prior pullback limit noted because it was influential, and I just want to be able to eyeball this chart and see where it actually interacted with any relevant level. If there wasn't any, I'm not going to keep it. Also, just to point out, 83 is, or 82 is the objective. It's still an attraction. We're actually not even through here. There's just a little bit more. Sorry about that. So on one hand, 82 is now neutralized. It's still intact. It's still an attraction, but it's not going to become unfinished business if left outstanding. We could dip from here. We've come within 3 to 6 ticks of 82. If buyers are done, they're done. We can't hold them to any more than this necessarily. If it's still an attraction, it still gets the likelihood, but I'm going to get aggressive on a sell signal again because we've come to within 3 to 6 ticks of the objective. So if sellers can make it happen, they've got all this room down to the lower end of the range. It's a no bias window. But also, it's too late to invoke the grace period. We had to touch a bias signal within 3 minutes of 10:15 to invoke the grace period. Having said that, though, if at 10:30 anyway, we've exceeded the bias up signal, if the bias up signal is being probed, not overlapped, but probed, so the bar that's overlapping, it isn't even touching it, that's going to invalidate the no bias. Everything that we just decided was, what the market was telling us was that it intends to be range bound. By 10:30, buyers will have come in to say, actually, no. Right now, if you want to give it a benefit of the doubt that the bias signal is going to define this end of the window, the predictable is done. Now we're waiting on another signal, whether that's a reversal signal back down or at 10:30 to have maintained a break above the bias up signal to invalidate what was cleanly triggered at 10:15. This doesn't happen often, by the way. And if it does, no more objective. The bias parameters, while their levels are influential, it's too late to trigger bias up. But I'd expect 91 to be the next higher attraction if you're looking for a reward. And look at how this is behaving. I'm willing to give it every benefit of the doubt. So if bias up does not trigger now, well, it's too late to trigger bias up. Is that? Let me make sure that's clear so I can't answer the rest of it. Okay, so it's too late to invoke the grace period. We're already beyond that window. The only thing that can happen now is to invalidate the no bias. And the pullback limit is 41.82. So I don't care that the system earlier didn't tell me that this was going to happen. It told me the direction, it told me an attraction, it told me a timing window. We can never wait for perfect information, all of it. But if the template is filling in, or the remaining templates through the process of elimination, getting rid of those templates that were looking for something else, or that needed something else to stay in the running, and we're left with just the ones that at least tell us direction, then we can be positioned for something like this. Pullback limit is 84.25. And by the way, it's not 10:30 yet. As of 10:15, no bias triggered. As of 10:30, you tell me. If this isn't maintained, if we're back under 82, that's it. Upside done. Don't think it's not possible. Or historical. Definitely seen it. Multiple times. So right now there's room for a pullback to 80. Is the market going to take advantage of that? Is this break going to try to take advantage of that, squeeze that in there? Or wait till 10:30 has invalidated the no bias and then get in here with a dip? But right now, the nearest sell signal until some sort of complexity develops up here, or at 10:30 to have retraced back under 82, the nearest sell signal is actually 77.75. And I'm not at all suggesting I want to take a sell signal at 77.75. Not at this stage of the pattern. I'm really just trying to illustrate, here's how much room there is for selling pressure before it actually reverses momentum down. I definitely anticipate, if in fact momentum intends to reverse down, that I'll have an opportunity to adjust my sell signal higher. But right now, just for informational purposes, I want to point that out. We could dip down to 80 based on this pattern and its measurements, and still be threatening to reject the bias. Maintain upside momentum. B, we've got, now as we move past 10:30, past the first hour, 3 minutes of counter trend detouring. Weak-handed counter trend sponsorships attention span under the pullback limit that, if given the opportunity, might be a very compelling buy, because it would be that much closer to where we'd know it's wrong to be long. All right, so of course the next relevant information we're going to have is either crossing the pullback limit, dipping to 41.80, probing 77.75, or those are prices at 10:30 to see how all of this has been disposed of. On the long bond, I think the question was, what is the next target? Is that it? Is that the question? What's the first target in the 127s? So that has not changed for literally 2 months. It is the 127.16 area plus or minus. So nothing has changed with that. There's been no, I hope that wasn't, I didn't say or imply something. Can I direct you back to, I mean, literally this morning, we just covered this. If you could just go back to that, got a lot going on here. But literally, we've gone through this almost every day. There's unfinished business below, etc. If there's something, if you're, I can't understand what the question is that deviates from that. But if there's something that I didn't cover, please let me know what that is, and we can get to that. I'd love to do that. NVIDIA. Yeah, but honestly, if you get any of the first trades over the last couple months, you'll probably see it in there. But if there's something specific that's happening here that is deviating from that, let me know, and we can certainly address it. I don't know what else to go over, though. Can I take a look at NVIDIA? Big double top potential. So I need to publish some rules here. I have no idea what the double top is. If you can look at this and it stands out to you what you're talking about, I probably don't need the extra information. But if there's any sense that I'm going to look at this and be confused, please give me more information that I can go on. All right, double top of what is probably going to be an important element to that question. All right, I'm going to put this in the blog, and I'll be back shortly. Just to clarify, there are no dumb questions. There's just me pretend I'm dumb and try and be as clarifying as possible on any kind of question so we can just get to it, to the answer. Thank you. All right, as of 10:30, we are above the bias up signal decisively, so the bias that did trigger at 10:15 is invalidated. Whatever triggered at 10:15 is invalidated, and so it's too late, though. We don't have an objective in play, because not from the bias parameters, because the bias was just invalidated. However, we do have other patterns. And we are looking next for 41.91.92. And if we can get through 41.91.92, then our next objective is $98. It happens to be the bias up target. It's not in play, but it's still going to be relevant. If we can get through 91.92. Where do I get 91 from? Again, back to the blog every day. Next level, 41.91. So by the same token, if the bias has been invalidated, we're not necessarily going to extend higher. The bias is not guiding us. We don't have a requirement to get any higher. Now coming within 3 ticks of 41.91, we could start to see a reaction down. We've got RSIs overbought. Pullback limit is 86.75. And I'm going to get aggressive on a sell signal, because if all of that energy was expended, and we're still pulling back under the pullback limit, deeper than its first 3 minutes, triggering 83's sell signal. Even if we knew with 100% certainty we're going to resolve up, some kind of detour would be underway in that case. So if that sell signal triggers, here's my objective. Meanwhile, so long as the pullback limit isn't even threatened, and by the way, I'm about to raise it again. So long as the pullback limit is now 87.50. So long as it's not even being pierced, upside momentum remains intact. All right, so there's 91.92. 91.92. And then some, by the way. Pullback limit is 90. No assurance that this is going to extend higher. I'm not about to step in front of it. But just so you know, there's a pretty important level being tested. And there's its pullback limit. All right, any questions about any of this that we've been discussing, please let me know. I'll be right back. All right, with this overlap, I'm raising the pullback limit to 90.75. So it'll be easier to start actually triggering a reaction down. All right, we don't necessarily have downside potential to such a great degree any longer, but we still have a pullback limit that's being tested at a very relevant resistance, or a support, I'm sorry, it was a resistance on the way up, 41.91, essentially. See where the 3-minute low is to testing the pullback limit. It might still be an attractive sell. Or may just have to let it play out because we don't have that reliability that it's necessarily going to extend any deeper or much deeper than its first 3 minutes. And as well, those first 3 minutes, the more aggressive these first 3 minutes to testing the pullback limit, the more attractive it becomes to enter long. We'll already know, no matter how deep or shallow those first 3 minutes, how close we are to where we know it's wrong to be long. But adding in the characteristic, how aggressively the pullback limit is probed immediately, initially, does make it less likely to extend and a better long entry. So this is actually behaving like that, and I'm looking for a lot of support in here if we actually get during these first 3 minutes to 85. That's going to be a really attractive long entry. No likelier to recover, but on this leg, but so attractively priced to where we know it's wrong to be long. Any questions about that? Here's the risk reward card. So this is the 3-minute low. Usual attention span of weak-handed counter trend sponsorship. Okay, we have, let me back up a second and make sure it's clear. There's no bias down here. The bias down signal is down here at 41.66. And we're very far removed from that, and a lot has developed since it was tested. So the bias down isn't even in play. The bias up was probed too late to trigger, so we're not even dealing with the bias. What we're wondering is whether this trend is going to extend or be rejected. So we're really just dealing with this one little element here, this red line. And this red line is allowed 3 minutes of being probed. It may be 3 points. In this case, it's more than 3 points. Whatever it is unknown until those 3 minutes are done. So here's what sellers were able to do in 3 minutes. Anything lower violates the uptrend. Upside momentum is violated anything lower than those 3 minutes. But usually, that's going to be the entirety of counter trend sponsorship. Do you understand the difference between counter trend and trend? That's a necessary differentiation. If we aren't understanding the difference between trend and counter trend, the rest of it is not going to make sense. So 3 minutes, once we know that 3 ticks, minimum 3 ticks qualifying to start the countdown, there's 3 minutes. And so long as the 3-minute low, let's say the 3-minute low is 41.85, so long as that's being overlapped in the heat of things, we don't want to back ourselves out of an entry. We've kind of moved away from the most aggressive since I began describing it. But the point is, at the end of those 3 minutes, we were sitting at the tail end of what we would assume to be weak-handed sellers. Not strong-handed, weak-handed. Not trending sponsorship, counter trend. Not likely to extend down, likely to recover. All those things I'm saying are suggesting buy it. Let me know if that's not clear. I need to be able to address what's not clear. I don't know what's not clear unless you let me know that wasn't clear. But all those different ways that I described that are ways that have been suggested to me over time. Now, this doesn't mean, just because it's bounced, doesn't mean that it's going to continue bouncing. But we got in good because we knew at the 3-minute low, we were sitting right at the low. We were so close to where we'd know it's wrong to be long. What a great risk to reward. Wrong not to be long. So now we don't need to keep our stop down here at 83. Now that we've bounced, we can adjust the stop. However much of this, if you were on it and you bought it when I was describing why it was time to consider buying it, and you're in around 85, you've got 4 points profit, maybe you're just interested in scalping, why not? We know 91 is significant resistance. Even if we knew with 100% certainty we're going to exceed 91, that doesn't mean we're going to exceed it right now. I'm willing to give it a benefit of the doubt because that was a pretty good correction. And as I was describing earlier, the more aggressive the pullback limit test, the immediate test, from a contrarian perspective, the likelier that it's going to run its course quicker. From a contrarian perspective, the more pessimistic this looks, the less bearish it is. So here we are reacting back up to basically 41.91 resistance. If you want the predictable, there it is. If you got in at 85, there's your exit. If this continues higher, you can always re-enter long. Okay, so what I just described, I'd like to open the floor to any questions about that, and only that, please, if you can. Any questions about it to understand it better. Remember, as fast as these things move, we don't get to go over all of this in real time. But as close to that event as we can, let's flesh it out. That's how the learning curve works. right, and we're already breaking higher. What's the next objective? 41.98. I'm going to move on. I haven't seen any more questions about what we were talking about. I'm pretty sure, though, there's probably some. So if you have any, let me know that they're in reference to that. But I'm going to be focused on explaining what's going on in the market right now. We're extending higher anyway. The 3 minutes allowed of counter trend detouring, the usual attention span of weak candle counter trend detouring. That gave us such a great opportunity, especially as aggressive as it was. Gave us that greater assurance, not 100% reliable, it never will be, but that these are the weak hands. Their attention span was limited to those 3 minutes. Their trending was pretty substantial, pretty steep. So what a great opportunity. And we were sitting at the end of those 3 minutes. Not always will we be sitting at the lower end, right there. What a great opportunity for long entry. If you weren't already stopped out, to add. And that's an example of how that plays out. All right, so I'm looking at a number of things here. I'm looking at the bias up target. It was never put into play, but it's still going to be a relevant level. It's based on patterns that were triggered, not on a timely basis where we could rely on their target being met. But 41.98 is their target, and it's met. There's a pattern in play. This is coiling. It looks like a wedge. Why not? But that pattern is projecting out to 98, and that's met. One thing I don't like about this, being long, by the way, pullback limit is 95. This is a pretty important level. Not so much because of the patterns that projected to it previously, as much as look at how we got here most recently. Look at the pullback that preceded this accumulative behavior. It was one leg down. That's it. I would much rather be long on a leg whose counter trend action is more long and drawn out, more considered. This is just one leg. Basically one blip down. And already we're rallying. Already we're trending up. Higher highs, higher lows. So I'm a little concerned that these buyers, being later, by the way, are already weaker handed. But also that just in this scheme of things, that this is not really, these were not sellers that were given a lot of latitude. These are not buyers that were very patient. So this looks like a pretty important level, like the market's going to be here. So I think that's the predictable, the reliable. I'm going to get more aggressive on a sell signal because of that as soon as I can, especially now that we're past the top of the hour. And we're still in the bias window. Not that it's a bias up or not, but still there is something to the timing windows and the different sponsorships that are or are not attracted. So if you want to give the trend every benefit of the doubt, so long as the pullback limit isn't violated, that's fine too, because above 98, we go solidly through 4,200. But that may be a little more difficult than it looks. So let's see where the pullback limit might be probed. Right now, I'm going to raise the sell signal to 90 anyway. Just to at least identify, here's how much room there is for selling pressure before, at this construct of the pattern, before it even suggests that momentum may be reversing down. And if sellers do start to get a toehold here, I'm actually going to leave this more open-ended as far as the downside. But there's a lot of room just to back and fill. Remember, the market's big goal here is, as far as sponsorship that got us here, the big goal here is to close positive to confirm yesterday's breakout. Well, look at all the room below that would still allow a positive close. The more bullish the market, don't think it's not going to try to take advantage of that. Rest on its laurels, trap sellers. It could pull back quite a bit here and still confirm yesterday's breakout. A healthy uptrend is going to take advantage of those little gimmicks. All right, so I'm willing to give buyers the benefit of the doubt, at least if not already selling into 41.98 with a buy stop above 41.98. Maybe not one tick above 41.98. There's really room for noise to 4,200 half. But a lot of resistance here, 41.98. Notice something though, I'm not expecting this to be a durable top. Look at RSIs. Now, on the one hand, RSIs are making lower highs. Certainly something to be aware of. Simultaneously, 1 minute, 3 minute RSIs making lower highs despite price making a higher high. At a relevant level. How do you know it's a relevant level? Because I put a big, thick green line there. Whatever the color, if it's aligned, it's an important level. It's resistance. We're also pretty deep into the bias window, so whatever the sponsorship is that made this happen is about to lose its attention span, lose its ranks are going to thin out. It's going to start to be overwhelmed by other sponsorship. Maybe it's more sponsorship that's going to come in even more aggressive than this to the upside. So long as the pullback limit holds its test. But nevertheless, RSIs are overbought. Lower overboughts, but overbought. So if there's a reaction down, because RSIs were able to get overbought at this high, they're going to require a retest. Now it is kind of close here on the 1 minute. Can you see that errant tick basically? That's not even an errant tick. I'm going to come back and say that's a negative divergence. So we don't even have overbought RSIs at the high. Very short-term basis here. You know the term garbage in, garbage out? Smaller in, smaller out. So it's a very minor difference. So I'm not going to base the entire session's outlook on it, but just to point out, it's not as bullish as it could be. In any case, pullback limit being tested now after having held for multiple minutes at a relevant level. Bias window, whatever its sponsorship, in several minutes, it will come within view of lapsing. At 11:30, it starts lapsing. Here's the bias window listed at the bottom of the chart. At the bottom of the chart, see the timing windows? So this is going to start lapsing at 11:30. Well, within 10 or 15 minutes of the bottom of the hour, it's at least coming within view of lapsing. So we're losing that sponsorship. And we could be replacing it with some other sponsorship. So I'm waiting for the 3-minute low. So this is minute. I'm not sure where the timestamp is, but right now I'm looking at the 3rd minute. Right now I'm looking at the 3rd minute. So as soon as we have a bar that qualifies by being at least 3 ticks, 4 minutes during the first hour, we start the countdown. Now, again, I want to be precise in my definitions, but that doesn't mean we're necessarily going to be precise in our reactions. So we're trying to be precise. There's a precise level, there's a precise timing, a precise countdown. But what we're doing is identifying the 3-minute low, and even that can be probed and overlapped. That's why we give it a 1 or 2 point buffer, room for noise. But we do want to get a handle on the usual attention span of counter-trend sponsorship. And we're talking about herd mentality. A herd is not going to necessarily have their clocks set to the exact same time. So give it a few seconds either way. But yeah, it's not necessarily going to be the first minute. If that first bar were only piercing this by 2 ticks, and then the next bar was the one that qualified, that next bar would be the first minute. So this is where the risk to reward calculations come in handy. The consideration. Because one of 2 things happens here. Either the rally retraces or fails. Now that retracement can turn into something more substantial to the upside. The failure can turn into something more substantial to the downside. But here we are at the 3-minute low. That's actually just for that reason alone, it's a very attractive long entry, because at the end of those 3 minutes, we're sitting at the 3-minute low, having nothing to do with any greater likelihood of recovering. Having nothing to do with any greater likelihood of resuming the rally. Just being that much closer to where we'd know it's wrong to be long. Being able to get in that much closer to where we'd be able to lose the least. Our stop would be that much closer to the entry. Now it so happens that overall, pullback limits are likelier to hold, likelier to be retraced to the origin of the pullback. So if you calculate that origin of the pullback at 98 and the entry, let's say it's 93, 5 points to the upside, 3 points to the downside, that's better than a 1 to 2, almost a 1 to 3 risk to reward. That's a very compelling long entry. It's almost an automatic buy. Now, a little bit more information here, like we are testing a pretty big resistance, so maybe not as likely to resume the rally. RSIs aren't necessarily overbought simultaneously at the high, so not necessarily required to retrace the origin of this pullback. So it's not as attractive as other setups. Still pretty attractive. Why not? I mean, if you're going to use that strategy, don't let my calculation stand in the way on one end of the equation, and miss the opportunity on the other. My suggestion, if using that strategy at all, you've got to use it all the time, without discretion. If that tactic's going to be used, use it. Otherwise, don't. Even if we've got this 41.98 that we just reacted to, because if that's wrong, if buyers, look at where we are at the end of the bias window, we're about to lose a lot of sponsorship here. We're also about to start attracting other sponsorship. If that 41.98 gives way, we're going not just a little bit higher, a lot higher. Now, I will say its room for noise is 4,200 half, so we're going to need to take that out as well. So this may very well be exited at a loss, but while reversing to short. Because if we're actually going to validate that the bias up target is going to hold, there's a significant pullback or correction that will need to take place. A lot of refueling. And then there's this earlier pattern I was describing. As I said, this isn't the most bullish setup here to just plop down and already start rallying higher highs, higher lows. That's not the definition of a thought out correction. Corrections, you want to see get rid of weak-handed longs. You want to see the low be reflected or be as pessimistic as possible, to have flushed out as many sellers as possible. This is the opposite end of that spectrum of pullbacks. To still be a pullback, but the least bit of pain possible. That's not the most aggressive pullback. It can still fly. It's still going to produce a higher high. And maybe it'll go on because of the proximity to the timing window lapse. Maybe we'll run out of these sellers, these aggressive sellers, these impatient sellers, and we'll replace them with enough offsetting strong-handed buyers. I don't know. I'm not going to try and make that call. Just the likelihood. That's why I'm being more circumspect here. So, 3-minute low, 1 or 2 points lower. Actually, I'm at 90 on a sell signal. Would violate the pullback limit. We'll need another buy signal at that point to reinstate upside. All right, any questions about any of that or the strategy surrounding the setup that's right in front of us right now? Let me know. So, okay, I will look and make sure that you're I see actually 3. Nice. Thank you, folks. Thank you very much. 3 new subscriptions. Here, if you can scroll back in the chat, or just to be clear. So this is the I see. This is the free version. This is a simulcast of the vidiROOM upgrade, which is normally an additional $200 a month, $200 every 4 weeks. If you click here, and I'm being told we have 3 new subscribers this morning. Thank you, folks. If you just subscribed, if you're still in this room, make sure you follow the instructions to also sign up for email alerts. Get on that list. We're about to send another one out to get it automatically sent to you. Make sure you follow that link. Let me know if you're having any difficulty following that link to get email alerts. But that's something that you don't see in here. In the simulcast, you're not seeing the blog, the email alerts that are sent out, the references, the access to the blog, for instance, is this vidiViews where we've got all this information, a narrative for the learning curve to help you along the learning curve. All right, so this is not necessarily make or break, but this is basically sellers now. They're actually making a move. They're stronger handed sellers probing under the first 3 minutes, usual attention span of weaker handed sponsorship. Now comes stronger handed. They are behaving. Look at these bigger consecutive bars. That's what we want to see from reinforcements. So basically what's happening here is sellers are attracting reinforcements. But are they stronger handed than buyers? This is where they prove it out by establishing a 3-minute low and then extending under the 3-minute low. And by the way, if you've signed up, if you're still in the YouTube room and you've already signed up for the service, I suggest going over there. The YouTube is just YouTube, and there's some latency. The vidiROOM itself is up to date, and you definitely want to get the advantage of that. And again, if you're in the room or in the service, not only go to the room, not only log into the blog, make sure you sign up for the email alerts. We're about to send another one out at the top of the hour with the afternoon bias parameters. Yesterday, I feel guilty not pushing, not soliciting as aggressively, and so if you weren't available, if you didn't stick around after the morning, then you missed out on yesterday afternoon's setup. My bad. Today it's yours. So let me know if I can help you if you run into any difficulty subscribing. All right. And when you subscribe, just so you know, you also get a series, a email series every day of videos. You're taking down the learning curve. So I'm going to introduce a buy signal, because if sellers don't bring it, remember they've got 3 minutes probing under the sell signal, 3 minutes counter trending. This is the range. This is all that they're scoping out as far as testing this signal. Look at this range that you can't really tell actually right now with the distance, but that was a pretty wide range testing the buy signal earlier. Well, during the open, there's going to be more noise. Decidedly narrower range testing this signal. So back above 92. Point or two room for noise. Here's a technique that I use to identify some nearby resistance in this case, or support. But do you see the counter trend leg? Can you see that that's the last counter trend? Before we got into this setup, there's the last counter trend leg. So I'm going to take a 61.8% retracement of that leg, which low to high is 93.25. Actually, my technique is I back out the errant ticks and the top tick just to be sure. Right, pretty much the same thing, 93.50. So that's actually, does 93.50, does that honor a 1 to 2 point buffer for noise? It does. So if I want to get aggressive on a buy signal, if I want to get back in the game on the long side as quickly as possible when sellers are absorbed or prove that that was it for them, rather than trigger this sell signal, they've instead painted themselves in a corner. The most aggressive I can get if I wanted to is a buy signal above 93.50. I might be whipsawed right back into a short, but considering the timing window, yeah, so the counter trend attention, I'm just reading these comments here. Great comments, guys. The idea of counter trend sponsorship, weak-handed counter trend sponsorship, it's not just the weak-handed sellers that are doing this. It's all, if this is in fact turns out to be weaker-handed sellers that traps themselves, that runs out of ammo. It's also stronger-handed buyers that are letting them. It's their attention span as well. But it is a very important concept to the entire vidiTrade system. So when you subscribe, there are two emails that go out. They come from two different sources. They both have a link. They both have the same link to the site. So have you not gotten either one of those? So there's a question, is there a specific group of people coming in at 11:30, or is it just people who are more inclined to trade at this time of day? Or is it really a dilution of the two and more? Because what we see in these timing windows that are labeled beneath the chart are affirmative, let's say. During these windows, we can define who's involved, even if to define them as being undefined. So like during the first 15 minutes, there's so many different disparate groups of interests, everybody trying to get positioned for the day for one reason or the other. But then in between that and 10:15, people coming and going, those that were positioning themselves for the day, they're leaving. Those that wait, you always hear, don't trade the open, it's too volatile. Well, those people are just now arriving after that. So there's a little change over there. During the bias window, then that's concentrated with people who are focused on trading the morning. But during that window between 11:30 as we get into the noon hour, really from 11:30 until we get into the afternoon bias window, it's not so much who's coming in as who's leaving, or really of those that are remaining, what their attention span really is. It's kind of nominal. It's not like the exchanges close, but in a lot of cases, back in the day, you'd just see the clerks sitting there napping. It's manned, but not very much attention being paid. There's also Europe's exchanges closing, so there's some positioning that's going on there that suddenly comes to an end, or that's being unwound over here. So a lot of different things going on, kind of like another 15 minutes of volatility, but not with the volatility. So it's not so much that I'm trying to identify, or that I'm assuming that I can identify what motivations there are among the people coming in at 11:30, so much as the motivations we were able to identify for that window are now lapsing. So it's been a while. The first bar under the inflection point has yet to be exceeded at all. So the 3-minute low to testing the sell signal. The 3-minute low to testing the sell signal is the first overlap of that sell signal. It hasn't even been probed itself. So that's a little suspicious. That makes me a little suspicious of sellers. I at least need to see some follow through here.
got my buy signal limit. All right, a reminder, the free YouTube simulcast, this room closes during the noon hour. So probably not an entire hour from now, but once we get into the noon hour, we'll be wrapping it up in here. If you are interested in maintaining if you're interested in maintaining until the next time we do this is going to be well into June. Definitely want to go ahead and hit that offer. Clearly coordinated or organized or well behaved, but in any case, you can see the impatience, higher highs, higher lows, but it hasn't taken out a prior high, not even the inflection of it. You know, we're going to be revisiting our list of stocks that I introduced coverage of. And just a heads up, I'm going to be adding Snowflake to that. So the sell signal was never probed any deeper than its first 3 minutes, so it's still a valid inflection, but since we're actually probing this buy signal, until that is detoured, till we know where its 3-minute detour is, I can't get very aggressive on reinstating a sell. I could on the buy because we already knew where the 3-minute detour was, and 1 or 2 points higher, buffer for noise. That worked out. You can see why I settled on 1 or 2 points higher, or also looked at as we walked through this exercise earlier, the 61.8% retracement of this bounce along the way. You can see how that lends itself to an inflection. That's basically where the mass psychology is identifying a singular numerical representation of that entire range. So right now I'm lowering the sell signal to 87. I'll raise it as soon as possible, and if this buy signal is more productive, that should be sooner rather than later. But now it's the buy signal's opportunity to be productive or not. It's very possible this was the entirety of the pullback. It's very possible that we're looking at basically, it's a little off, not very parallel, but a flag of sorts, or uptrending channel, that is, sorry. Remember, room for noise on retesting 4098, room for noise up to 4200 half. We need to start taking out 4200 half to have any degree of confidence that this is becoming something more substantial to the upside. Pullback limit is 95.50. So the reason I call it a 3-minute detour is that every one of these red and blue and green, I don't see any green lines today, but these inflection points identify the difference between strong-handed and weak-handed sponsorship, strong-handed patience and weak-handed impatience. So I don't know until the 3 minutes have elapsed. I don't know where the attention span is of the sellers that are making this, that are probing lower, or the buyers that are letting them. But I know that the usual attention span of counter trend sponsorship is 3 minutes, 4 minutes during the open. So that's the thing about vidiTrade. The analysis is not just price, it's time. That's what sets it apart. Is we're dealing in psychologies. Psychologies have attention spans. Mass psychologies especially, even if they have the most concentrated, focused among them, they're still held back on an average by the weaker among them. So the average usual attention span is about 3 minutes, 4 minutes during the open. And during those 3 or 4 minutes, I want to see how much the other sponsorship is going to let them run. How much distance. So it's that timing window that establishes the price to focus on. I need a specific price to where I know that window opens. That window opens here when price is pierced by at least 3 ticks to start the countdown. And then 3 minutes later, I know not that all 3 minutes needed to have trended down. It did in this case. Not that all 3 minutes needed to have developed under that setup, under the pullback limit. Could have had 1 bar and then back up, but the countdown would still be going. But I need to know, where did that attention span begin and end? How extensive was it? In this case, it basically got down to 92. And now here's a buy signal, and I'm looking for its attention span. Is this strong-handed buyers? I don't know. Let's see where they got within 3 minutes. They got up here to 98. Since then, that's been exceeded, but only by sentiment extreme, briefly, errant ticks, not quite bigger sponsorship. 98's a pretty big line in the sand here. Until 98 is exceeded decisively, I don't know if this is just double topping or if it's on its way to higher highs. It's going to attract reinforcements if there's anything behind it. Now on the open, we get told a lot, don't trade the open. We don't know what's going to happen. Too volatile. So that to me sounds like a challenge. So I've created some inputs or identified some inputs that very often give us immediately actionable triggers. Today, and I'm very clear about that in the 9:15 pre-open update, whether we have them. Today we did not. Today specifically said we don't have immediately actionable, but I can still identify what the relevant levels are. But very often we'll have immediately actionable triggers, and I'll label them as such. I'll note that where they are likelier than not to be exceeded very quickly and aggressively. So, 2 questions. How long does it take someone to learn? I'm going to say that once you get that original concept down, the initial concept that it's price and time, everything is focused on that. The first week, I have videos that go out, and then in subsequent weeks, more. And of course, I suggest immersing yourself for the first couple of hours of the day in the vidiROOM, here in the vidiROOM, because I talk pretty much nonstop, taking all this price action and describing it in those terms until basically, if you're involved, it's second nature to you. So it really should be within a couple of days that you grasp the concept to the point where you can use it to interpret, to filter what you're hearing and seeing. Beyond that, it's a matter of how immersed you want to be. Can it be applied to stocks or futures? Really, I just apply it to ES. Now, there are other things about it. As soon as we can identify the inflection point, that yes, we can identify to stocks and futures, and I do. But as far as, I don't know if you're asking about what we're focused on ES. But during the morning and afternoon before the close, so pre-open, the strategy planner session, you can scroll back and see the recording for it. The pre-open update, the pre-close market wrap. We look at other markets. We look at the euro, and all those different lessons are applied to that. Precious metals, the long bond, crude oil, Bitcoin. But just not on unless I see a setup, I don't stalk it like I do ES. So again, if you're interested, here's the link. Normally the vidiROOM is $200 upcharge, but follow that link and you can get the first 3 terms free. So I'm not actually looking at headlines right now. This sure looks like it's a knee-jerk reaction to something. We don't have any control over that. That's why you have to have a stop. Have to have a stop resting, trailing, however it is managed. You can always re-enter long, but you don't want to get caught in something that suddenly we're down 50 points. Always re-enter long. So right now we're looking at this. We don't know. Is this the usual attention span? Is this just a knee-jerk reaction to a headline? Ignore the sell signal. We can't be doing both. We can't be testing a pullback limit whose successful test, if limited to 3 minutes, would just be fluctuation around the signal or of the signal or of the trend. Can't be doing both. Can't be testing the pullback limit for that and triggering a sell signal with the same bars. So the sell signal is disqualified from triggering. Ignore it. It doesn't actually exist right now. Not until these 3 minutes have elapsed, or until the 3 minutes are coming close to elapsing. But if this is just a knee-jerk reaction to a headline, which it sure feels like, I don't see it, but if it is, then within 3 minutes, that's the usual attention span of counter-trend sponsorship. Weak-handed counter-trend sponsorship. And that's who reacts to headlines, is weak hands. So 3rd minute, now done. Right at my inflection, but I still want a 1 or 2 point buffer for noise, so I'm actually going to be down here. I can't be any tighter than 85. Really 84.25 is even preferable. But here we are sitting at the low of what we know to be the window where if this is counter trend, weak-handed counter trend sponsorship, that's it. They're done. That doesn't make it any likelier to be to be just weak-handed. Maybe the news is so substantial that upon further consideration, it's going to attract stronger-handed sellers too. Maybe because the timing window is lapsing, we're out of buyers. The market's going to behave differently now. It's going to want to take this to a lower level before coming in with stronger hands. But generally, this is it for weak-handed sponsorship. I'm willing to stop and reverse to short down here because I can get long here as cheap as possible. This is just the cheapest I'm going to get in if it's just a temporary pullback. Or if it's a temporary pullback that's going to extend to the next lower level, probably something like 74, just eyeballing this. We're still in this signal. This signal that triggered up here at 93.50, this is still part of that signal. Think in terms of price and time. So you don't have to buy the dip. You can, let's see, where did this reaction basically begin? So back above 93.50, a 61.8 retrace. It's not as attractively priced. It's definitely more expensive. But it's also with greater assurance that whatever this reaction was is not that substantial, not that meaningful, that it's potentially attracting stronger-handed buyers. Your strategy, how you react to it, to all these different inputs, that's up to you. And I'll continue identifying all those different opportunities or possibilities as possible. In the heat of the moment, we can't do that. So definitely be here, immerse yourself, focus on this until you've got it down. This is the learning curve time. So that when this setup appears, we don't have to go through all the listings so you can know what your options are You're already up to speed. I can reference it in shorthand, or you already know. This is the 3-minute low. If you want a knife catch, maybe it's a knife catch, but it's a well-reasoned one. But you gotta have a stop. And in this case, I'd even have a stop and reverse to short because there's a sell signal down here. All right, so it is time for the afternoon bias parameters. I'll get those up on the blog. By the way, the timing of this was interesting because it came before we got to within 3 minutes of noon. That's when I calculate the bias parameters, is based on prices 3 minutes to noon. So actually my price that I'm using, among others, is much lower than where we were several minutes earlier. So, in other words, my bias up signal was probably going to be 40, well, it could have been as high as 42.08. And now it's 42.01. Interesting. All right, so the bias parameters are on the blog. Email alerts outbound. Let's get them on screen. $42.01 and the bias up target $42.12. $41.85 bias down signal, which by the way doesn't trigger until 120. Not 1220, 120. All right, so that 3-minute low to testing the pullback limit is violated. The bias up, or the buy signal is done. That one is this just noon hour weak-handed follow through to weak-handed knee-jerk reaction to the headline? Could be. We don't know everything in real time, but we do know what the possibilities are. It's not totally random. Anybody gets, anybody sees what that headline might have been? I mean, a headline is a headline, but it's helpful to categorize it. But clearly this is a headline reaction. That's not an organic reaction. So bigger line in the sand at 84.25. Really the entire, and you can see it's really just errant ticks under 85 anyway. So as soon as I know where the counter trending is, if there is any, back above the sell signal, I'll get more aggressive on the buy signal. This being the noon hour, there's definitely more potential that this is just noise. And I'll want to exploit that. But that's going to be basically a stop and reverse to long. If anybody, on any signal or any, entry that's already made based on just having pierced the inflection. Meanwhile, we're establishing a 3-minute low, and until that's exceeded by reinforcements, there is that potential for 3 minutes of counter trending. I wouldn't expect it to get out above 88.25. That's the 61.8 retracement of this little consolidation. So I can get this much more aggressive on the buy, 90.75. So not the reliability and predictability of the morning, but still pretty interesting because there are specific nuances for the noon hour, almost by default, because there's a lack of specific nuances that we would expect during the morning. So 3 minutes of counter trending, detouring back above the sell signal. Usual attention span. Didn't have to happen. Didn't have to stretch the rubber band. It just so happens. But it can behave like that. So I still don't know whether this is just a knee-jerk reaction to something, that the noon hour, the timing of it just happens to be able to play out because we don't have the sponsorship of the bias window, haven't established the sponsorship of the afternoon. So in that noon hour noise is the potential for stuff like this. It cuts either way. Interesting running correction-like behavior if we back out this little blip up. Entered aggressively, exited aggressively. Bounce limit is 79.75. Now for a bounce limit, the line is green instead of red. And it's just like the sell signal, just like any other inflection point. It gets to be probed for 3 minutes. First minimum 3 tick, 3 minute probe. Starts the countdown. When we know where the 3 minute high is, that's the usual attention span of weak handed counter trend sponsorship. If the trend remains down, that's where it's going to peak. $72, 74 that is a likely attraction. Not knowing that that is or isn't a reaction to a headline and what that, at least the category that it is, it's really difficult to even make an assumption where it's been discounted. All right, so we are getting ready shortly here, not too many more minutes, that the YouTube simulcast of the vidiROOM add-on is going to terminate. This is the second day of a 2-day special look that I do every 2 to 3 weeks. What with the holiday coming up, I don't think I'm going to do the next one until well into June. But if you'd like this, if you want to keep learning, I've made a special price available. Normally it's $175 for the blog and the email alerts and everything except for this vidiROOM, which is an additional $200. But if you take advantage of the link that's in the chat, for the first 3 terms, get the vidiROOM for free. Save $600. And meanwhile, you're just moving along the learning curve, immersing yourself in the vidiROOM during the mornings when I'm talking, I don't want to say nonstop, but incessantly. Seems like a better adjective. Annoyingly? No, let's go with incessantly. So, as I'm describing every one of these fluctuations and what I'm thinking and why, my goal is to get you to be able to see what I see and know why. And so I share my thoughts in as constructive a way as possible that does that. And also provide a video series and, of course, the intraday blog updates that are emailed out. Not to mention the signals. So, if that's of interest to you, you can use that link if you want today or tomorrow. But it is important to use it now, this week, to lock in that $200 savings for 3 terms. By the way, I do coaching when you get in. Regardless of the discount, you're treated just like a full-paying subscriber. You have a free coaching session by phone. In the next week or 2, hopefully by Memorial Day, if not right after, we're launching a knowledge base. So that'll be, you'll have access to that. That's literally a listing, directory of all my setups, and which you can get just by sitting in here, but to be able to get a listing, a historical listing of all incidents that I've been able to witness and record. So you can see all these instances, get to know them, refer to them, get this library of images. When I say here's the setup, go see the images and see how they trade. Thank you, William. Bonsoir. Countertrend sponsorship. We candid at least. 3 minutes allowed. It's the noon hour if you want to give it a few seconds or a few ticks of noise. But suddenly, magically stops. It doesn't mean anything that we have or have not necessarily resumed the decline. What's more important is that during those first few minutes, we establish a limit. And it is holding, and it remains vulnerable to reversing down. So I am going to start getting more aggressive on the buy signal, but look at what we've got. We've got an ongoing series of lower lows and lower highs. Lower lows and lower highs. That's a trend. I don't care that it's not organized, that the resistance points don't necessarily correlate or coordinate precisely. Yeah, they kind of do, actually. With downtrending resistance. Get rid of the errant ticks here. What is important is that it's a series of lower lows and lower highs, at least for the purpose of telling me I'm not going to try to step in front of it. It is a trend. So I've got to at least recover this prior high, this last relative high, in this case, the last touch of the trend line. I'm not going to have a buy signal any tighter than that. I might have one in here based on some other rules that aren't actually in play right now. So I'm not trying to be very aggressive at the moment. 41.88. And 74, while that is a likely attraction, isn't necessarily the end of the game here. $77, $66, either one as qualified as the other. interesting. I haven't seen that. Thank you for tracking that down. I really appreciate it. All right, turning into a little bit of a flag here. Question on Netflix. What's happening? Much further can it go? How far it can go further? So Netflix, we actually had as a. I introduced its parameters in October because of a my 5-stage pattern that had developed. Running correction that was entered and exited aggressively into a trough. I'm looking for the upper quadrant to be retraced of the running correction, and that measures out basically to 432. So that is my target, 432. And then Zoom. So Zoom and PayPal, these companies that just seem great. Great brands would love to get involved, but they just keep making lower lows. Zoom I had identified in October as well, and it blew itself out. Couldn't hold its pullback. Double bottom at 85, 86 has come and gone. So burden of proof is on buyers with Zoom. I've got to see this take out 70, let's call it 78. That's the earliest that I can get bullish. And without it, I am actively bearish. All right, question, am I bearish because the price is in the bias window between the red? No. I'm bearish because there's a sell signal here that triggered, and I've got lower targets outstanding, and here's the bounce limit. So the sell signal triggered, and it got so low that I was able to identify a bounce limit, and that bounce limit's 3-minute high hasn't been exceeded. The bounce limit isn't going to be a precise stop. It's allowed to be counter trended 3 minutes. There's the 3-minute high up to 83.75. That has yet to be exceeded, so the sell signal's momentum remains intact. That's why I'm bearish. Now, at 120, if we're under the bias down signal, remember, here, let me get my teacher's aid. Hang on one second. Okay. So this is the blog. This is vidiViews. And here's the PM bias. So these are the signals, these red and green lines. The red line's 41.85 and 41.74. If at 120 we're under 41.85, that'll put into play 41.74. So that hasn't even triggered yet. At 120, we might be back above 41.85. If we're back above 41.85 at 120 and bias down doesn't trigger, instead it's no bias, then I won't be bearish anymore. Did that make sense? So there were two answers there. Two answers. One had to do with what is making me bearish, but the other one discussed the bias. If that's not clear to you, on the right side, if that's not clear to you yet, the buy signals and the sell signals and the bounce limit, if that's not clear to you, don't worry about the left side. Let's get this down first. Now this is a buy signal, and I'm going to start being bullish if the buy signal starts being probed. All right, folks, my alarm is going off. I need to close the YouTube simulcast. So if you need that link for the special pricing, here it is one more time. Okay, so YouTube keeps cutting it off, or YouTube keeps editing the link into something else. I suggest click on the link so you can get the page open in your browser. And then if you complete it or not, that's fine. But or get the link once you open it in your browser. You can get the link from your browser. YouTube, though, edits the link that it displays, so don't rely on that. But if you're interested, you can act on that today. Looks like we're not at all finished with setups today, tomorrow. Today's going to potentially confirm yesterday's breakout, and if it doesn't, that has actually a very predictive behavior the next day, tomorrow. So, yeah, I mean, what I propose is that the signals that I display, that's my goal, is that they pay for the service several times over. That's my goal. The education, of course, and the entertainment. How do you put a price on that? Anyway, so this room is about to be closed. We're going to count down. Everybody want to count down with me? Thanks very much for participating. If you were here both days, both mornings. If that's your only interest, I'll see you again in June. Make sure you've subscribed to the channel so you are made aware of that. All right, everyone. Thanks again. 10, 9. I'm not really going to count down. Take care, everyone.